All right, hello everybody. This is Mike Rixey. I am the lead options instructor for Netpicks, and this is our options trade of the week. We have had a very interesting few weeks in this market. We've had some big moves in both directions. We started out this week, had some pretty nasty selling. We have since recovered over the past day and a half or so in a pretty impressive way. And the reason for that, we continue to be a very news-driven market. A lot of headlines hitting, whether it be with the China-US trade war, with the whole Trump tweet situation that can pop up at any point during the day or night. We've got interest rates in focus here as well. And as a result, we've had a lot of indecisive trading, a lot of false moves in both directions. And I know those can be very frustrating depending on your system, depending on the markets that you're trading. What I want to show you here today is one way of navigating through the uncertain markets that we've been seeing lately, because I don't see the uncertainty going anywhere anytime soon. I think we're going to continue to see the big moves back and forth throughout the remainder of this year. So I want to talk about Netflix as our example. Everybody gets attracted to trading options because of the profit potential that buying long calls and long puts can present. And that's absolutely true. There's a tremendous amount of profit potential there. The problem with strictly buying long calls and long puts, they only give you one way of making money. If I wanted to put on a bullish trade on Netflix and I went out and bought a call option, the only way I make money is if that stock moves higher, it does so quickly, and it does so in a big enough way. If it takes too long, if the move's not big enough, I'm in trouble. It's an aggressive way to potentially make some pretty big profits. The problem I have is those types of trades will leave you with a lower profit potential. You don't want to strictly limit yourself to trading those types of positions. What you also want to do is use the vertical spreads to your advantage. And we're going to talk about using a credit spread here on Netflix to give us a bullish trade, but with a neutral kicker. So I'll talk to you about the specific options trade in just a moment, but let's talk about Netflix. Let's take a look at the Netflix chart so I can start to paint a picture for you as to why we're taking this trade. Netflix has been one of those products that has refused to get out of its own way. It's been very oversold. We've had no bounces to speak of at all, really over the past few months. As a result, it's very oversold. Our way of gauging how oversold it is by using our pulse indicator, which is that red and yellow histogram towards the bottom of the chart. Over the last few weeks, you can see we've had a number of yellow bars plot on that pulse indicator. Those represent between a 1 and a 2 standard deviation channel move on the downside. In other words, we're very oversold. It doesn't mean that Netflix can't continue to move lower from here. It just means it's not statistically probable. When I see this type of pattern develop, it oftentimes leads to a period of consolidation or a reversal in the other direction, in this case to the upside. Because of that, I want to lean a little bit bullish here. Well, one way of doing that is buying a call option. But like I just mentioned a few moments ago, not thrilled with that selection because the only way I make money is if Netflix moves higher. Well, we have earnings upcoming. We have earnings out in 12 days. On Netflix. I am not convinced that this thing is going to make a big move higher in the next 12 days. There's probably going to be some uncertainty going into that earnings statement. Well, one way that I can lean bullish, but in a little bit more conservative way, is to sell a put spread, which is what we're going to talk about next. So we did finally get Netflix to pop higher here over the last few days. We've had a nice little reversal to the upside. We got price action to close above our moving averages. Those blue and red lines there, those represent the 5 and the 8-period exponential moving averages. So we finally got to close above those key levels, and that confirmed my bullish stance on Netflix. So let's go over to the trade page. I'm going to use the October monthly options for this trade. Those are the options with 14 days left. The reason why I'm using those shorter term options, I do not plan on being in this trade long. Because earnings come out on October 16th, I need to make sure I'm out of the position before then. I'm using these shorter term options. That way, if I can get this trade on, let it work for the next week or so, and then take the trade off, that's perfect. That's ideal. I don't want to go out to November. I don't want to go out to some of those weekly options farther out in time because that would require me to hold through earnings, and I'm just not interested in taking that additional risk. So we're using the October 18 options. I'm going to go to the put options on the right-hand side of the Thinkorswim platform. I'm going to go to the 257.5, 255 put spread. So I'm going to go to the 257.5 puts here on the right-hand side. I'm going to right-click on those, go to sell, and go to vertical. And that's going to pop up an order down at the bottom of my platform. And it loads it up to where I'm selling the 257.5 put, which is exactly what I want to do. And then at the same time, I'm going to be buying the 255 put. The reason I'm buying that 255 put at the same time, it's going to define my risk. It's going to tie up less capital. In this type of environment, I would much rather be in a risk-defined trade. Knowing that a headline can hit, knowing that Trump can tweet at any point during the day or night, I want to know what my worst-case scenario is. Just in case I'm on the wrong side of the trade and this whole thing goes crazy, I want to know what my worst case scenario is. Well, by putting on this trade, I can collect 85 cents. So let me click on confirm and send, and let's break this trade down in more detail. You can see from my order confirmation box that I am risking $165 to make 85, right around risk 2 to make 1. The reason why I'm okay with that ratio is I have 5 ways of making money on this position. Let's talk about those 5. Let's talk about it from a directional perspective first. My break-even point would be at 256.65. It's that number right there. That number is calculated by taking the 257.5 put that I'm selling. We are going to subtract the 85 cents that I'm collecting to put the trade on. That leaves me with a break-even at 256.65. I don't care if Netflix moves up, down, or sideways. In all 3 scenarios, I can make money as long as Netflix stays above 256.65. Even if it only stays above that level by a penny, I'm okay. The only move that hurts me is a big move lower from here, which I'm not expecting because we're already oversold, which is what we talked about a few moments ago on the pulse indicator. I also make money from time decay adding up and if volatility decreases. That gives me my 5 different ways of making money on the position. All right, the reason I love this trade, why do I like this trade over buying a long call? It gives me 5 ways of making money on the trade. I tie up far less capital. If I come in and just take a look at buying a long call option, I'm potentially talking about a few $1,000s. I'm able to lower that cost all the way down to $165. So you can take this type of a trade regardless of your account size. If you've got a larger account size, put it on 10 times. You still only have $1,700 of risk, and now you've got $850 of profit potential. It's one of those, I'm not going to say stress-free trades, but it does drastically reduce the stress level because I don't need a big directional move. If we just chop sideways, I can make money. Now, am I telling you should only trade credit spreads? No. There's a time and a place to buy calls and puts. I've got some of those trades on in my portfolio right now. But when you start to mix in these other trade types, when you start to layer in that diversification, that's going to allow you to react to different types of markets. That's going to lead to more consistent returns in your account over time. Don't limit yourself to just buying calls and puts. You want to take advantage of the flexibility that options give you. So we're tying up $165 of capital to make 85. I make money 5 different ways. We'll plan on closing this trade out when I can keep 75% of my max profit. So because I'm collecting 85 cents here, if I can buy this thing back for around 21 cents or so, that would be acceptable. So I can create that closing order right away. If I can buy it back for 21 cents, I would book the nice profit on the position, get out before earnings, and call it a day. All right. So we'll continue to manage this trade. I'll continue to keep you in the loop on what happens over the next couple of weeks. If you have questions between now and then, if you're taking this trade and you want to know, hey, should I take it off? How do I manage it? Feel free to post a comment here in the blog. You can post a comment on the YouTube video or email me directly. Mike@netpicks.com is the email address. So I'm going to wrap this video up here. I'll be back with you guys next week. We'll take a look at Netflix again and then also take a look at a brand new options trade of the week. So enjoy your weekend, everybody, and we'll talk to you next week.